Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, this is a buy video. I do 2 buy videos per week, one on Monday and one on Thursday. On the Thursday buy videos, what I do is I pick 5 different stocks and I deposit $20 into each of those, and then I show you what the new dividends are going to be for those stocks as well as the entire portfolio. So what we're looking at right now, this is my taxable M1 stock brokerage account, my Average Joe Dividends portfolio. This is what I go into depth in for most of my videos. It's about 15% of my current net worth, and I decided to build this portfolio to build cash flow, because at some point, even though I had a net worth north of $1 million, I realized that really cash flow is king in investing. I know a lot of people look for it in real estate investing. I know you can use the 4% rule and you can sell, portions of your portfolio. But one thing, especially that I saw during the, COVID and during the Great Recession, even the Y2K tech bust, I saw the stock market go down, significantly, over 50% in the Great Recession. And what I want to do is I want to have cash flow in place where it doesn't matter. It's not telling me when it's a good time to retire or to even draw from the portfolio. Even through thick and thin, companies like Coke and Pepsi, Home Depot, Lowe's, they've been paying a steady dividend, actually a growing dividend through those times. And that's why I am building up this portfolio and I'm continuing to add to it. So we can see right now the portfolio is now, it's at an all-time high at it's over $280,000. Look at the return over the last year, where we started at right about the 230 mark, and right now, like I said, we're at 280. So going up 50 grand in gains over that time. I should say in portfolio value, because I did deposit money in there. There were dividends and things like that, but at least the portfolio value has gone up roughly 50K over that time period. And I have not contributed close to $50,000, that's for sure, with over the last year. So let's take a look at the last month. We'll see how the performance is. So I mean, pretty good, almost up 4%. You can see here, and then when you add in the dividends, over 4.86%, and no surprise today, we are up 0.47%, and we're at an all-time high for the portfolio. You can see right here, it just seems to go up and to the right. We'll look at all-time. And after I really kicked in a lot of money over here, about this time, it's still going up and to the right, and which is nice to see. And realistically, we're going to see some down times. We could see times where we're down for even a couple years, because that's really what the stock market does. And the way I invest is, anything could happen. We could have a cut in 50% or more. I could be down to 140 in the portfolio, and I'm going to stay the course. I'll probably deploy a lot of cash along the way if an event like that happens. So that's enough for kind of the background and kind of my strategy on this portfolio. Let's go into the activity log and we'll see what I chose. In the Monday videos, what I do is I deposit $100 like on Thursdays, but I let M1 do the picking. What I mean by that is it has auto invest, and what I do is I put the $100 in, and then it picks the underweighted portion of the portfolio. So whatever's kind of gone down through the week, it's going to buy that automatically, kind of doing, AI kind of doing the picking, so to speak. So let's go ahead and we'll click on the 5 buys. Again, I put $20 into each of these. What I'll do is I'll click on each of these and I'll show you the fractional shares that are purchased with a small purchase like $20. And then we're going to go to my Google Docs spreadsheet and we'll see the result for the next dividend for these positions, as well as the monthly, quarterly, and annual cash flow. And we'll close it out with my total net worth. So if you're curious about that, stick around for the rest of the video. If you're new to these videos or new to the channel, welcome. Please subscribe so you don't miss future videos. I do 2 buys per week, and I also do a summary for the month. I show the proof of the dividends that I received rather than just reading from a spreadsheet or showing a spreadsheet. I'm not saying people are lying, but I like to show the proof of the actual dividends. Also, please click the like button. That's the best way to support me. I'm not trying to ask for money from you guys. I don't want your money. And I'm not trying to sell a course to you guys or asking you guys to buy me a cup of coffee, anything like that. Just click the like button. That's all you have to do. You guys keep your own money and invest it. Invest it into dividend paying stocks. And so let's go ahead and we'll look at the first one. This is KKR, and it's kind of a lesser known stock, but they've been doing quite well for me. I've like doubled my money in this investment. It pays a small dividend, but last year they increased their dividend by 6%. And what this company does is they buy other companies and then they kind of invest in them and then they hold on to them for like 3 to 5 years and then they sell them for a profit, and they kind of wash, rinse, repeat with that process, picking up a new company once they sell one and do the same thing, try to double their money, seems to be what they try to do or more. And KKR has been quite successful at that. So the $20 it bought 0.14216 of a share of KKR. And then next up, SCHD, putting $20 in here and buying 0.72254. This will help to kind of soften or cushion the blow for what the Q1 dividends could be for SCHD. It's going to be lower. It always is for Q1 for SCHD. So by having more shares, it'll boost the dividend that way because the next dividend is going to be lower. And then Qualcomm was my next selection. That bought 0.11627 of a share of Qualcomm. And then next up, Hershey's. Hershey's has just not been doing great. It's been in the 180s pretty recently. And, they've had some issues, but I think long term, I think Hershey's will get back, up there and probably, who knows, in five years or less be probably above $200. I'm hoping. But they've been paying a rising dividend as well. So to me, I'm kind of buying this on sale, at least in my opinion. Of course, what I'm doing is not investment advice. I'm showing you guys how I've built this dividend portfolio and, how it's growing over time. And so hopefully you guys can kind of do something like it. But it's a choose your own adventure. You pick your own stocks and you buy, of course, when you think things are or the conditions are right, things are on sale. So again, Hershey's bought 0.12679 of a share of Hershey's there. And then last up, Home Depot, kind of buying a little sliver here, 0.04874 before Home Depot announces their dividend increase, which I believe is in March. We'll take a look at my sheet here in a second. We're going to bounce over to it in a moment. We will bounce back to M1 to go to the holdings tab to grab some data to update the sheet with those 5 buys. But let's go over to the Google Docs spreadsheet. I'll leave a link below to this sheet. If you have a lot of dividend paying stocks or just stocks in general, this is a good place to track it. And so I don't have to go to M1 to look up the total for the portfolio. It's right here. Of course, there's a disconnect of when Google and M1 are pulling the share prices, so it's not going to match until the close of the market. But what this sheet shows, it has the company, the ticker symbol. Of course, I had to type these in for my own positions. You'll have to put your own stocks in if you use my sheet. And then the Google Finance, there's a function here, pulling from B2, whatever ticker symbol you put in, it's going to pull up that value and put that price there for you. Here's the average cost that I've bought Home Depot, for example. It's using a VLOOKUP from the M1 data tab, which we're going to pull in some data in just a moment. Same with the shares. That's also using M1 data tab on this sheet. And it's going to update the 3 columns for average shares and then the cost basis, also using VLOOKUP. Here's the value. If I were to sell Home Depot today, you can see here's my cost basis for Home Depot. Here's my gain or loss. Here's the gain or loss in a percentage. Anything above 25% is in green. Here is the dividend per share. and everything is quarterly except for O and BST. They're in blue, and those pay me again every month, and they're in the blue right there. I have SCHD in purple because they have a variable dividend, much like other ETFs like VTI and VU. So I just kind of signified that with a color to show that. Here is the current yield. We bought a little bit of Home Depot. Here's what it's yielding, but here is the yield on my cost at 3% because I've bought Home Depot for a lower price. You can see again, I've bought the average of my share. This is going to go up because I put $20 in, but before the purchase it was $2.98 while the share price is at 409. So that's where we get that disconnect on the yield on my cost. And of course, it's more significant where things have like doubled or tripled or more for me. Like, for example, Exxon, I show this example a lot because you can see the current yield, which is nice for Exxon, but look at my current yield on cost. And anything above 5% in here is green, showing in green. So you can see that's what I want to see, and is a high yield on cost compared to the yield. Over time, that's going to happen when the share price appreciation along with dividend increases. And then everything on this sheet right now, it is arranged by the pay date. And then you can see here's my next dividend, which Home Depot, it paid its last dividend here on the 13th. And I had a day, so everything's going to be a day later because M1 has a 1 day delay. And last dividend was, well, the next dividend, I should say, is going to be $10.07. The last dividend, I track it over here, was $10.02. With that dividend drip, it added an additional nickel. We're going to add even more because remember, there was a $20 buy there. With Home Depot, I've hard coded the dividend here, but we're going to see it change in the next dividend column. Same with SCHD. And then here's the dividends I've received so far. And then tomorrow I get paid with Apple is going to pay their dividend. And I already looked it up, M1, but I'll show you how I do that just to kind of make sure I didn't buy something after the X dividend date. So we'll go into dividend portfolio. We'll pull up Apple and I'll show you that real quick, how M1 kind of works it. And we can see the next dividend. And of course, we'll have to do this by 1 month. And then I wonder why it's doing that for wrong stock there. Go back. So I must have clicked too quickly on that. I thought I had Apple, but it went for AbbVie for some reason. It must have had the focus on that. So my apologies. We'll go to 1 month view, and then the Apple. Make sure we have the right company. Yep, Apple. And dividends earned $3.81. So we did not buy anything after the ex-dividend date. So tomorrow morning I'll wake up and I'll have $3.81. And what I'm doing with this money is I am investing all dividends back into the company that paid them, except for 3 of them, which is SCHD and then BST. So those are kind of 2 big bombs that hit. And then NVIDIA is another one. The reason I don't put NVIDIA back in is because it pays a tiny dividend in here. There it is right here. It's only going to pay 42 cents for the next dividend. They'll be at the end of March. So it's not enough to drip it in. I think it has to be $1 or more. So I just have that as cash and it'll get reinvested. It wouldn't make much of a difference anyway, but I just use SCHD and BST right now to rebalance the portfolio. So the dividends received so far, I'll show you that real quick. And I have it highlighted for February. These are my dividend payers right here, you can see. And then all these other ones that paid in December, those are going to announce new dividend dates. They'll be paying in March. These will be paying in April. And then down the line, these February payers, they'll be paying in May. It's a constant process of just, it should look like a circle rather than a line going down because it just keeps going around and around. And these same companies keep paying me all the time, and they keep paying me more and more every time. And I'll illustrate this real quickly with the dividends that have been paid so far. And then this is counting tomorrow with $85.48. But let's compare it to with the dividend drip. So the 85.48, 86.72. Do you see how just with just this small subset, how it's going to go up just with the dividend drips? And then Apple will probably add another penny, maybe. We'll see if that 381 will make enough difference, because Apple pays a 0.42% dividend yield. So you can see I have a good mixture of things like Verizon that pays over 6% dividend, and then things that pay a lower dividend. But you see what happens here. Verizon has only made me 12.94% in appreciation, including dividends, but something like American Express has paid nearly 90%, or not paid, it has increased nearly 90% in value for me. So you can see why a lot of times the lower yielders are usually your faster, quicker growers. But, oops, sorry about that. Knocked something off my desk there. But AbbVie kind of has almost, it's kind of like it has everything. It has good appreciation in there. It pays a good dividend, and they like to increase their dividend nicely as well. You can see 5% is what AbbVie did last October. So let's go ahead and we'll scroll down. You can see how I hard coded again the Home Depot, the SCHD, and then KKR, and then Hershey's and Qualcomm. So those are going to go up because of the $20 that I put in for each of those. And here's my where I track my monthly cash flow average, and I've hard coded in what it is currently right here, and then it's going to change over here once I update the sheet. We're going to see it go up modestly. We'll probably crack into 1,042 and maybe change if we're lucky with the addition, because this is just a $100 deposit. So let's go ahead and we'll grab that data from M1. I'll show you how this works. I go to the holding tab, so I don't have to type in the new number of shares, average share price, my cost basis for the positions I buy in. What I do is I just grab the data from the name column. This works for M1. And I kind of developed this just out of kind of a way to, I wanted to save time, and I figured out a way to do it. So grab the data, then I go to the M1 data tab. Remember the VLOOKUPs. So the VLOOKUPs are pulling the data from this tab, the M1 data tab, to pull the shares, cost basis, and average of all my positions in my M1 taxable stock brokerage account. So everything is pasted in the A column. It's very messy data, but it sticks to the A column. And then columns B, C, and D extract it. And then the VLOOKUPs pull the data. You can see SCHD, like BST, where it's pulling it with the VLOOKUP. So it's already done its magic. We'll go back to the portfolio tab, and we'll see the new, we're going to read out the new dividends for each of the 5 positions. We'll look at the monthly, quarterly, and annual new cash flow from the portfolio as well. So Home Depot, we were at $10.07. So next dividend in March will be $10.18. Let's take a look. But it's going to be actually more than that, because sometime this month, Home Depot is likely to announce a dividend increase. So hopefully we get another 8%. So that could give us like another 80 cents or so on top of this. So we could be close to $11 in the next dividend that's going to pay in March. And then SCHD moving from 961.65 to 961.84 again. These dividends hinge on SCHD not changing their dividend from the 0.2645. It's going to change. It's not going to be as high. But even though we're still buying a fractional share of whatever times whatever the new dividend is, so it's going to make it better. Because take a look at, I'll just show you some historicals of the dividends I've received from SCHD. Here is the last dividend payout at 946, and you can see what the dividend reinvestment did to kick it up now to 961.84. But this is December, September, June. Here's last year, was at 702 last March. So this is December, September, June, and then it was 638 in 2023. So you can see 638, 702. Hopefully it's going to be in the 800s, somewhere in there. for that. We'll see. Hopefully I didn't mess up my. I sure did. We'll just step out of that. There we go. So just kind of show you that. It's going to probably be in the 800s in March. We'll see. Hopefully, probably the very lowest at the high 700s. We'll see. But we'll take a look here. So again, tomorrow Apple may go up to 382, maybe not. $20 KKR. That it's going to move the next dividend, and we're past the ex dividend date, so it's going to be in May. Let's see when KKR announces there. So yeah, May. Hopefully they do another 6% there. But in May, it's going to likely just be 279 if I don't buy more fractional shares between now and the ex dividend dates for KKR. And then here we are at Hershey's. So keep moving this one up from 1261 now to 1278. We can see some dividend history in Hershey's. Last dividend was 1049. It was in the 9s, 8s, 7s, 6. So every quarter it's kind of going up here. So I like that I'm kind of gobbling up more Hershey's chocolate here and increasing that dividend. And the last dividend increase, look at this for Hershey's. I don't expect this. I'll be happy with 5% because Hershey's has been struggling a little bit. And hey, if we get 5%, great. If they do another 15%, I'll be blown away. But not counting on it. So last one is Qualcomm, moving from 757 to 767. So moving up a dime. But these are small deposits. We're making small gradual gains with this portfolio. And things that increase, the dividend is, obviously buying more fractional shares, but also the dividend drips that contributes to it, as well as the dividend increases. So those three things are increasing the dividends here. We can see Qualcomm, the trajectory is up, and that's the same for all of these. Again, you're welcome to check out this sheet. You can see the dividend histories for all of these, how they're all going upwards. Because one of the rules I have in the portfolio is if a dividend, or if it's cut, if a dividend is cut or suspended, that stock will be sold. So all these are increasing their dividends, even though not all of them increase their dividends annually. There's just a few in here I have marked with VAR. BST has not increased their dividend for a couple years now, but it's been a good investment for me. Increases their dividend more than once a year. But Oracle does it every 2 years, it seems like. And Digital Realty is another one, like BST. It's been a few years, but they're doing well for me as far as the stock appreciation, so I'm going to hang on to those. And with the dividend drips and buying more, the dividend winds up going up anyway. So here we are at the cash flow average table. So monthly cash flow average previously was 1041.86, and like I said, is going to go to 1042 and change, so 1042.05. Quarterly cash flows is moving from 3125.57 to 3126.16, and the annual, and this is the annual, this is monthly, quarterly, and annual paychecks. I could draw this if I wanted to. I'm not. Even if I did draw this 1,000, it's an average, because some months pay more than others. You can see my color key. The March, June, September, December, those are the big months. The other months in here, they pay lower. But when you add them up and divide by 3, that's where you get the average here. I could draw the dividends from this portfolio, not put another nickel into it, and it's going to keep paying me more every year anyway, because, again, those dividend increases that these companies are paying me, it just keeps going up anyway at about a 5 to 7% clip on average. So, and then annual, moving up to 12,504.63. So let's go ahead and we're gonna take the new monthly cash flow average. I track that on a tab called monthly average dividend tracking. So 1,042.05. We'll go all the way to the bottom here because there's a lot of transactions here. 1,042.05. In the event, it was a $100 deposit. And you know what? I don't know if we counted. Yeah, it must have. But I think we were at a higher amount for some. Yeah, we were. Hold on one second. Let me copy this over because I inserted lines and it messed up my math. There we go. It was at 1,041.86. What happened was yesterday I had two events and two nice events, and Cisco announced a 3% dividend increase. So that added 11 cents of monthly income to the portfolio without putting in a penny. And then Avista, same day yesterday, had a 3% dividend increase, and that added 29 cents to the monthly cash flow income every single month at 29 cents. And then today, with the $100 deposit, it added 19 cents. So you can see just the events in February. Starting here, we've added a total of $5.07 just in this, with deposits and then drips and then dividend increases. And the reason I show this is to show progress and to show you guys too that the dividends are not static. They keep going up, and here's why. Here's why my income is changing. I just want to show you guys this, as well as tracking it for myself. At some point, I'm going to stop doing this because it is a little bit tedious, but I want to show you guys that every little bit helps. Every little deposit, every little dividend increase, and every drip matters. So we're going to go to the dividend tracker tab. I've been doing these videos since January 2021, and here is the portfolio value there. The dividends paid in January 2021. You can see the first quarter of dividends, and then the quarter-on-quarter increase by percentage, and then dollars. And I started tracking the average monthly dividend, and you have to have a quarterly amount first. You divide that by 3 to kind of smooth it out, because what happens is, I'll show you, as we get to present day in 2025, is we get the small, small, large, small, small, and then something happened here where SCHD paid its dividend a day late in July, so it went here for the big month in July. But it's gonna, small, small, large, small, small. If February, and then March is going to be big, and that's how that works. So here's the portfolio value. We are at an all-time high. The previous all-time high was right here in November 2024, and we're all-time highs. And then let me update with the Apple dividend in here real quick. It's going to add a few dollars to that. So we're up to 85.48. We've updated that, and then we can see here's the average monthly dividend. You can see the historicals of this going up, and then per month you can see the decreases. Those are because of SCHD Q1. Sometimes there's a lower dividend in Q3, which happened, but then you can see the increase there with Q4. With SCHD, it does it every year, with Q4 being usually the largest, but it happened to be the largest in Q2, I believe, in June there. For SCHD, look at that huge increase with the monthly income from this portfolio. So again, here's the 507 that was from the monthly average dividend tracking tab. And then here, the month over month gain in the income, 0.49%. Here's the annual dividends again, the 12,504.63. And we've increased the dividends, the annual dividends, by $60.80 in the month of February alone. $100 deposit, so there's the $400 right there. So we'll close out the video on total net worth. We're probably pretty close to an all-time high here. We'll see. Probably not till tomorrow, because, or actually close of market, because I do have VTSAX, which that value does not update until the close of the market. It's a mutual fund, as well as this Fidelity one here too. So these are kind of frozen while the ETFs trade like a stock throughout the day. So, but let's take a look. I'll just show you what the other 85% of my total net worth is. Again, the M1 portfolio is, this is 15% of my total net worth. It's not to brag, it's just to show you, though, I have a big foundation of ETFs. This is what made me more confident to kind of go after some cash flow, because I had plenty, at least in my opinion, in net worth. And then I decided, I kind of took a pivot where I don't want to have to sell any shares, and especially sell in a down market. So that's why I kind of wanted to, or I had the idea of just living off of the dividends alone. So we'll take a look at the value here of my Vanguard account. I have an IRA. This is a traditional A Roth taxable brokerage account right now, the current value is at 486. And then my current employer 401k, all in S&P 500 fund, Fidelity, 103k. And then over at M1 Finance, I have another IRA. This is my pretty much my employment from 1996 to 2019, and that's at 721k. And then here again, here's the dividend portfolio on this line. And then here is my 1 year emergency fund. Here is like 6 month emergency fund over at Synchrony. And then here is, this is pretty much 2 months of spending kept over at Capital One. Anytime I get to $10,000, what I do is I will send it over. Right now, I sent this over to Synchrony because Synchrony usually has the higher amount in the interest rates. So make more off my cash. I have a high cash cushion, and for me that just makes me sleep well at night. And then here's the value of my home. I don't count like vehicles or collectibles, any other things that I could theoretically sell for money. I just don't really track that because they don't really produce a dividend. The only thing though, you could argue, why do you show this? It's more for motivation for me to pay it off. And I'll show you in my liabilities here, where this is my current credit card balance, which I pay off in full every month. So I do not accrue interest on that. That's not to say I used to have credit card debt in my 20s coming out of college, and it was a horrible feeling. So I've been there. I've paid interest. If you're there, pay off your credit cards first before you even think about investing. Some investment people will tell you just do both so you don't miss out on the compounding. Well, your credit card debt is compounding way faster than any investments could ever make you money, in my opinion. So pay them off. And then here's my other liability. This is my house, my current mortgage, which I'm likely to liquidate this over here, the taxable brokerage account, to get my expenses so low that I will be able to retire early quite easily. So what I've done is I've taken the average dividend using the 2024 dividend for the ETFs because those amounts are lumpy. I didn't want to put in the dividend for a high month and then have it artificially show an average monthly dividend for these. So I do is like at the end of each year, I go ahead and grab the total and then I divide it out and by the month and get a rate for the average monthly dividend based, of course, upon the value of what the investment is. So I've kind of got it monthly. So when I have access to like my IRA, my 401k, of course, I will transfer over to an IRA somewhere either at M1 or at Vanguard. But I've shown the average monthly dividend because, again, my plan is to live off the dividends only. And I've also included interest from savings accounts. So that is variable here. But you add it all up, though, and my average monthly dividend for everything is an average of $3,485 and change. So that is what I plan to, probably in about 8, 9 years, when I have access to all this. I'm 51 right now, so I can't access the IRA portion. I can certainly access the taxable portions, which is here and here. So, but here's the total net worth right now, standing at 1.28 or $1.823 million. Of course, this is changing all the time. It could go back to 1.7, go down to 1.6. Who knows? I can't control the market. And you can see the breakdown is mostly stocks, over 87%. Here's my home equity at 7%. That's why I don't have a problem with showing it, because it's not a huge portion of my total net worth. A lot of people, like especially I listen to a lot of financial podcasts, personal finance podcasts, and people will have a super high net worth, but then half of their net worth is in their home. It's in their home equity, and that does absolutely nothing for them as far as really empowering them financially. Of course, when they pay off the home totally, they'll have lower expenses. That's really all it can do. Of course, you can borrow against your equity, but I think that gets people in more trouble than helps them out, because people, they'll borrow against home equity for home improvements or vacations or vehicles or you name it. No way. I'm just going to pay off this amount, and I'm not going to look back. Renovations, forget about it. I'll do them. I'll cash flow them. No way I'll take a loan out for that. So here's my cash, position right here. Very large. That keep it again. It helps me sleep well at night. And if something did happen, where if I did step away from work, retired, and the market crashed, well, then rather than even dripping my dividends, I may even decide to just use the cash and then drip the dividends to grow those even more. So even though I'm technically not selling shares, you kind of are with a dividend, technically, you know what I mean? Um, but again, if the market's doing great, I'm just going to draw the dividends, no problem. Once I'm in retirement, but I may think about burning a little cash though, when the market's way down. We'll see, and let those dividends drip to build them up even more. So here's the breakdown between pre-tax and after-tax freedom. Is what I call it, because you really can't. I technically tap into this with a penalty, but I don't like to count it. Here's the breakdown: U.S., international, and then I've been tracking my net worth very closely here, and this is just my own personal net worth, not with a partner or a spouse. This is just me. I was divorced in June of 2022, so my net worth was a lot higher there before the splitting of assets. But technically, I mean, that's what it was before anyway. And a lot of people who go onto the shows, again, they're announcing what their net worth is, and it's their with their spouse. And with the divorce rate at 50% and climbing, maybe we should look at our net worth in a little bit different way. I mean, I listened to the Choose FI podcast, and I was, well, I shouldn't say I was shocked. It happens. It's a fact of life with divorce. How Brad Barrett sadly announced that he was going through a divorce, and that made me think about like expenses. He was talking about his expenses. And that was one thing I really didn't know. It was like it was a blind spot knowing what my life was really going to cost on my own. It's you don't know until you're there. It's a little bit scary. So that's why I did track all of my expenses to the penny, and you can see what they are. And I tracked it against my W-2 income, and I always tried to have a gap. And if you don't track your expenses, you don't know what your life costs. Like, for example, I can tell you exactly what my life costs. Let's take a look at all of my expenses here, and we'll pull an average. And I have good data from November 2022. Let's go to the average cost. So I can tell you right there, it costs me roughly, we'll round up to $4,600 a month, or what my expenses are. And that's what I'm going to need in retirement. Likely, probably, maybe less, maybe more. A lot of times people say you spend a little bit, less when you leave work, but so many people, they don't track their expenses. It is mind blowing. I was one of those people too, but it was a little bit. It's hard too when you're in a when you pool your money with a partner too. It's really hard, especially if they have their own credit card or whatever. It's it's a nightmare to track it. But I recommend even trying to do that. You need to know what your expenses are. But my goal is always to have some kind of gap. This does not include my dividends or anything else, or the small amount I make from this YouTube channel, which I'm not trying to go full time anyway. I'm just trying to really just show you guys what I'm doing and motivate you guys to do the same and actually do better than me. I like to see every single one of you exceed what I'm doing. I would be very happy seeing that, trust me. So, but you can see though, I've had some close months here, but I've had some other months where I've had, over 1900, or when I had a bonus in here, it really boosted it. So, but overall though, most months I do have a gap, so it just adds to the cash position. At some point, I have to draw a line in the sand to say, hey, anything above this line, I think 100,000 is probably ridiculous. I'd have to start probably then moving the cash then into from cash to the M1 taxable brokerage account, to add there, because it'll work harder for me in the dividend portfolio. It's going to appreciate faster over time and add more income as well. But we'll see. I'll have to draw that line in the sand here soon, especially getting close to 100,000. So that's all I had to show you guys for this video. I'm still here. Sorry, I rambled a lot in this video. But here are the buys: KKR, SCHD, Qualcomm, Hershey's, and Home Depot. So let me know in the comments below what you guys are buying to close out this week, or maybe what you're going to be buying on Monday morning. If you got value from the video, please click the like button. Also, subscribe to the channel. I hope everyone has a great rest of your week and a great weekend. Thank you.